I have been wrong many times, yet I am consistently profitable year after year. Who gives a fuck about right or wrong when the end goal here is to make money? I laugh when people say, you cover both sides so you can't be wrong. No, idiot. I cover both sides because I know I can be wrong. If you are consistently only looking in one particular direction, you are going to suffer when the market inevitably reverses, because that's how you fucking lose. Do I play both sides of the market to avoid being wrong? Yes, kind of. But there's a difference. You see, I don't really care about being right or wrong. I am in the game of making money. And in fact, when it comes to trading, if you are not considering both sides, what the fuck are you doing? You're not a trader, you're a gambler. And this is something I've received almost on every single video since I've started on YouTube many years ago and on social media. A lot of people say the same thing to me. You play both sides of the market so you cannot be wrong, and then you can call one side and say, I told you. Not true. In fact, I don't really care about being wrong, to be honest with you. And for that matter, I don't really care about much besides friends, family, loved ones, and making money from the markets. Now, any normal, real trader will tell you that losses are normal. And in fact, you can be incredibly profitable despite having losses. This is the reality of trading. You will always be wrong, and you will always have losses. My goal as a crypto investor and now trader especially is to avoid being wrong as much as possible to save money, or at the very least, avoid losing as much money as possible. Now, playing both sides is often misinterpreted as, I think the market, as an example, will go higher, but be careful of that level down below. This is exactly what you should be doing, specifically in an arena like cryptocurrencies, because it is very easy to be led astray. And I'm going to tell you where this all started. This started from 2017. In the bull run, I bought Ethereum around $6. I made a lot of money, but I also lost a lot of money because I was only looking in one direction, and that was up, higher. And the same applies for XRP as well. Now, I lost a lot of money in 2018 when the bear market struck, and as most successful traders end up doing, they are faced with a critical turning point where you have to learn from your mistakes, and you have to then realize what was the contributing factor to those unnecessary losses. And whilst I made fantastic money, the losses hurt me very badly. And I had to make a decision in that point to strip away the ego and start assessing where I was going wrong. And I quickly realized, and I'm sure many others have fallen into this trap, that I was only looking up. And this happens every single cycle. Every single cycle. Thousands of traders purely look upwards only, blinded by the media, blinded by those influencers. And then they round trip absolutely everything, only to be left with nothing to show. And that was me in 2018. Although I had a lot to show, and I still had a lot, I lost enough that it made me face a critical turning point where I had to wake the fuck up and start realizing nobody's opinions mattered besides my own. And nothing matters besides leaving the market with a profit. And that is how I have moved forward, developing the strategy of playing both sides. Now, the key behind cryptocurrencies is not necessarily to call both sides, and I will never come out and say, I told you so. In fact, I'm very open with losses, and I don't lose much, but I do get things wrong every now and then. A very notorious example is I shorted Bitcoin at 16K in 2021 as the bull market started exploding. I don't know about you, but that is legendary. Absolutely legendary. And it's been something that stuck with me for a while and stuck with many of you that have been following me over the years. Now, the key is, in that moment in particular as well, I got something wrong. I got a trade wrong, but I actually made a lot of money. In fact, from 2020 to 2021, I live documented on YouTube, social media, and for the members, a journey of turning $30,000 to over $600,000 with XRP. Yet, despite all of that happening, most people clung on to the reality that I had shorted Bitcoin at 16K. So although I lost, I think like 5K or 7K on that, I ended up making north of $600,000. But people were more oriented on those losses. The truth is, when you're in my position where you do things more publicly, you are always in the scope of scrutiny. And no matter what you do, I could give $10 million to charity, but if I was to not give £5 to this person, people would look at that instead of looking at the larger picture or the bigger picture in general. Now, playing both sides in the market, putting that all aside, and there's been many more examples, even recently, from, again, a great example, January 2025. I called the top, the Pico top, from the highs to 70K I was looking for. We fell $4,000 short. Nobody paid attention to the fact I'd called that top perfectly. They instead focused on the fact I fell $4,000 short of my target. Unfortunately, we live in this world where people just look at the negatives. Now, I'm going to explain why it is so crucial to focus on playing both sides. And if you consistently prepare for the worst, you will survive. The problem with most crypto traders, myself being one of those people once upon a time, is predominantly looking in one direction contributed to losses I was not ready to handle emotionally. Mentally, it hurt. It hurt me a lot because whilst I left with something, I could not get out of my mind the money that I had left behind in the process from simply being too fucking greedy. It is a reality that most of us face in those moments. Now, cryptocurrencies especially is a market that is unbelievably volatile and prone to significant magnitudes of manipulation. And if you are consistently only looking in one particular direction, you are going to suffer when the market inevitably reverses, which it always does. Although we're in a continuous bull run, and we basically have been since Bitcoin's inception, it is continuously providing tricks and traps that you must always prepare for. Because by simply understanding the downside, being open-minded to it, and preparing for the worst case scenario, even when you're looking upwards, you will be able to utilize those opportunities in a moment where most people are capitulating, getting liquidated, or simply not preparing. And this is where a very limited thought belief comes into play when it comes to most crypto investors. Let's say right now, I'm actually really bullish on altcoins in this present moment. And I'm looking for meteoric targets, and it's very rare for me to be this bullish, but I am only bullish in select moments. Despite having invested several six figures into the market as of present, I'm still consistently looking lower. The key here is to look at the opposite of what you think and feel, because you will eventually be wrong. And this is the key behind playing both sides. You must always, as a trader or investor, have a full understanding and preparation specifically when investing in the market to understand where the market can go if you are wrong, because you will be wrong. I have been wrong many times, yet I am consistently profitable year after year without fail. And the key behind that is because I know what to do. And by simply understanding risks and the opposing side, I'm able to invest accordingly, invest the correct amount of capital, leave capital sidelined. Something that you see a lot in crypto is mockery. You're sidelined, you're sidelined, you're sidelined. I get that a lot. But yet I have several six figures invested, but people would still say you're sidelined, you're not exposed enough. But there's a reason for that. Because I know even if I have invested at a particular price point, there is still a considerable risk that markets could go lower. The prices could go lower. Therefore, wouldn't it be foolish to place full faith and conviction 100% in a market that I do not control? None of us control, for that matter. You are not in control of the financial markets. They are designed for you to lose. They are designed to trick you and lead you astray. Therefore, if you cannot control the market you participate in, and if you understand the reality that you are playing in that playground, the only thing you can physically control is when you get into the market, when you get out of the market, and how much you risk placing within the market. And by playing both sides and being somewhat more optimistic to risk thresholds that the market can achieve, often unexpectedly, you will save your ass 100 times over. How many times have you seen, or even yourself been involved in a situation where you are really bullish, you are expecting the market to rally, and then bang, something comes out of nowhere, the classic black swan. Trump says something stupid, something happens as always. By simply understanding the correct technical application of the markets and looking at possibilities of where it can go, it may never happen. And something I do with the innovation members is something called a threat assessment, where occasionally when I start to identify key opportunities where risk can take place, I will map out a level that will seem quite crazy. It might seem very far-fetched, even delusional to some extent, but many times and more often than not, it will come through, often in a very short space of time. And by simply doing that, it allows members and myself to constantly be aware of the risk before placing capital in the market. And even if I do place capital in the market, by simply understanding the opposite side of the coin, pun intended, you are aware of how to invest accordingly. Whereas most people fall into the trap in crypto of going absolutely all in with the delusional beliefs that the market will go up forever, which is simply not the case. Now, being wrong is going to happen. So what do you do in the event you are wrong? Well, if you are investing in crypto and you place an investment within the market, if you enter at the incorrect price, specifically at the all-time high area or somewhere within the territory of current highs, and we are to see a massive crash or go into a bear market, there is a higher likelihood that it can take you a longer time to recover that money. Think about how many people bought altcoins in the 2021 cycle where things went truly parabolic. Most of those individuals, 4 years later, are still down 90% plus. Yet, during that cycle, by simply preparing for both sides, and if you've studied or followed the XRP documentary of that 30K to 600K flip, you would have seen, despite utmost euphoric moments where XRP was pumping and my investment was up significantly, I saw the risks to the downside. And instead of being blinded, I used the previous experiences that hurt me and caused significant damage to my advantage as a learning curve to better myself for future cycles. And inevitably, when the bear market comes in the current cycle, which it eventually will, you do not want to be that person that once again looks back in retrospect and goes, I should have sold. I should have taken something off the table. And the more you begin to focus on what happens if you're wrong, the more you will actually begin to succeed within the markets. It is the brutal reality. If you are willing to be wrong and willing to understand that you could be wrong, you will actually see greater success versus being delusional and believing with 100% conviction what you think and believe and what you've been told to believe is factual. And I see this all the time. People go all in. And people always say this, there is FOMO within crypto at a level I have not seen in any other market, especially when things go parabolic. Now, let's just say right now, a member comes up to me and they go, Torre, I didn't get in where you got in. I've joined innovation late, or even someone on social media. I haven't bought, the market's pumping. Shall I get in now? I'm always faced with a confliction in that level because I will never chase bullish candles. And I prefer to invest at very selective regions, which increase the risk to reward. Even if there's more downside, I can justify entering at the correct time and place, often backed with a very scary bearish candle, as you guys know. But in those predicaments, a lot of people, and this is a double-edged sword because it comes with buying and it comes with selling. And this is key. When it comes to buying, something I see a lot is people go, well, what if it goes higher? And my response is always, but what if it goes lower? Why does no one ever look at the market in that perspective? And most people have a sheer belief, mostly due to narratives and whatever videos they've consumed from crypto influencers or trading influencers in general, that skews their perception of what can happen. And the fear of missing out is quite intriguing to me psychologically because it always lures people to believe that there's a fear of markets going higher. But nobody seems to have the same fear of the market going against them. And no one really considers that in the moment. And when you've got big green bullish candles surge into the moon, it's very hard to perceive the downside because there is almost an overwhelming sense of urgency that lures you into those candles. And often, the faster those candles move and the more the narratives begin to brew in the background, especially on social media. If you scroll through X and just casually check your timeline, if you're involved in the crypto sector especially, CT is fucking insane. Even it affects me sometimes. It's why I don't really go on my timeline much. I mostly drop a tweet that I want to get out and get the hell off the app. Because there'll be times I'll be looking at the market, let's say, and I'll see a possibility for some downside. But then I go on my timeline and it's like a logarithmic XRP triangle pointed to $300, imminent breakout. This has been congested for weeks. And then you'll see Bitcoin to $1 million. And then Jamie Dimon has suddenly changed his mind and he loves Bitcoin now. And he says it's going to go to 3 million as well. All of these things subconsciously embed within us a somewhat delusional effect where we look at the market and then suddenly perceive it, and it can affect us subconsciously and affect our analysis. It affects all of us. In fact, there's been so many times I've seen stuff and it's almost made me second guess what I'm looking at in case I've missed something. But when you see the collective herd doing these things, it can blind you massively into making decisions that you could often regret later down the line. That's actually one of the biggest catalysts when it comes to unrealistic price expectations. So as an example, you go on X, you go on YouTube, you go on Instagram, whatever, and you see an XRP price prediction to $10,000. Well, that's going to almost convince you that it's somewhat justifiable to buy at the all-time highs of $3. Because it won't matter in 10 years. But that's how most people become bag holders. And one thing I actually did in 2017, despite being up millions, was I kept buying. I kept buying on the way up as well for Ethereum. Even though I somehow managed to recoup that thanks to 2021, thank God to those recoveries. Realistically, that was an incredibly stupid decision. And that's because I was so blinded at the time that I was looking at $10,000. In fact, even with XRP in the 2017 bull run, I lost a lot of money. I made a lot of money. Thank God I did. But I lost a lot because, again, I was blinded. I was looking at 5, 10, 20. Because in that moment, it is very hard to keep 2 feet on the ground and remain rational. And the key behind all of this, and why I do these in the videos, is to teach you guys, number one, it's perfectly fine. Because if it doesn't work out, it doesn't matter. And even when I have a sheer, unbelievable, unwavering conviction in one particular direction, I will look the other side always. And I would say as a crypto investor, it is absolutely crucial you do this or you will end up losing. It can take one fatal investment to wipe out all of your gains or blow your account from a leverage standpoint. The key behind all of this is to always be willing to accept you will be wrong. And this is why I laugh when people say, you cover both sides so you can't be wrong. No, idiot. I cover both sides because I know I can be wrong. That is actually where the strategy comes from. That's where the formula comes from. It's because I have an unwavering fear of making the same mistakes again. Therefore, even when taking a risk, I must understand where and why something could go against me. And I guarantee you, if you went into every single investment you made within crypto or any market for that matter, with an idea instead of what if I was wrong, I guarantee you, you would actually take less trades, be more profitable, and also probably not go all in, which is a mistake many people make, which leads me to the next point. Let's just say right now, although altcoins are generally near all-time lows, using current examples, I'm invested quite heavily now, but I still have sufficient firepower left, aka US dollars and GBP, to place within the market should we see another correction lower. Now, the key here is I have a very strong conviction, as you've probably gathered from my videos, that I think an alt season is coming. But that may not be triggered without some form of shake-up and FUD first. Yet, if I was to be completely naive to the reality that the market could still go down and won't precisely go up in a straight line, I would not be able to leverage those prices. And by constantly assessing key areas where the market could strike, often unexpectedly and rapidly, I am able to leave a bit of capital there to continuously benefit from true dollar cost averaging. And again, with the Ethereum and XRP situation in 2017, I created a set of rules and a strategy that for me works. It can often take longer, but it works and it keeps me safer and it keeps me profitable. I also avoid, as much as possible, only in rare circumstances do I do so, do I buy higher than my original price. Only when price is close enough to the lows that I deem it justifiable. One of my biggest fears in crypto, especially, is buying at a price that will not be easily recouped, because that is just depressing. And I'm sure we've all been there, where we've bought at a high price, probably with more than we can afford to lose, again, due to delusions and being blinded of unrealistic expectations, only to become a very pathetic bag holder for a very long time, essentially then trapped. And this is also a big issue. If you make those decisions, you become more emotionally attached to the market. Because of those fatal decisions you make, you are allowing and opening the doors for emotions to enter the picture. Now, as an example, let's say out of nowhere, from 100K, I'm not saying this will happen, but let's say I was mentally prepared. We're at 100K right now, let's say, and I'm like, I think there's a chance Bitcoin could go to 30K. Although I don't really see that right now, we're far too gone for that right now. But let's just say in that example, you prepared for that. There's two types of people, and this is also a very interesting side of crypto. You will often notice that any form of downside projection, prediction, or remote possibility mentioned leads to backlash and attack. That's not coming from profitable traders. That's coming from those who are balls deep, testicular deep in the market, who have no other option but to blindly believe the market is going higher, because they have based their investment decisions off of delusion. They have placed their life savings into the market. No sane person would make that decision anyway, and then of course believe the market's going to go in the other way. Otherwise, they wouldn't have made that decision in the first place. So in many circumstances, you could actually be correct that the market will go lower, but you can often then be deterred by the voices around you telling you it's impossible. If there's one thing I would tell you is an absolute guaranteed factual statement, the market will do the unthinkable at all times. The market will always pull back down. You will always get another opportunity to enter somewhere, even if it wasn't as low as where you entered. But the one thing the market will always do, and one thing you should always consider, is the opposite can happen. You must never, ever have the assumption and belief that you will never see those prices again, or we will never revisit those prices, because that's how you fucking lose. Because when those prices return, you need to be in the correct mind state and preparation to strike if those prices return. Because this is where things get juicy. The two demographics I'm talking about are the deluded people who tell you we'll never see those prices again. What do you think those people do when those prices return? Well, they've already bought so much higher that they end up panic selling in those moments. And they end up, instead of buying at those prices, selling. And then the market often goes higher. And then there's the other demographic of people that are fully aware, not deluded, not blind, adopt a bit of critical thinking, and have money there on the side prepared. Because when them prices come, they buy fearlessly. And this is why I do that. In the example of Bitcoin at 100K to 30K, if I was to tell you right now, we could get a crash in 1 week to 30K, I don't think that's going to happen. But just by saying that, if you've seen it visually as a possibility with your technicals, just keep that in your mind. And whenever you are placing a trade, and whether you are full-blown bullish, you are literally targeting the moon, which quite frankly, I am at the moment with altcoins. If you simply see something that conflicts your analysis, don't fear it. It's actually your saving grace. And more often than not, you will see signs that can often go against you, and signs that almost conflict with your overall underlying bias. That's not to be feared. In fact, you should be listening to your eyes. In theory, your eyes will be telling you the truth, and your brain, due to external programming, will often distract you to ignore that. But instead, pay attention to it. And that can be your saving grace later down the line, because it could be that one simple factor that goes against you that can save your life in the right circumstances. Because who the hell wants to ride through an entire bull market with nothing left to show at the end? At the end of the day, playing both sides for me is one of the safest, most sensible, and arguably the most rational ways to play the market. Who gives a fuck about right or wrong when the end goal here is to make money, and most importantly, save your money and protect your capital? A lot of people forget how hard it is to make money. And number one, if you are working, let's say, a regular job, your money isn't growing on trees. No one's money grows on trees. And one thing I often teach people that kind of stems from the origins of playing both sides is to remember that the money you are placing within the market comes from hard work and often labor. I always say this to people. Don't forget the source and where the money you've placed into the market derives from. Look at how long it takes to earn every dollar. Assess it that way. When you realize how much time, how much effort, how much labor, all of that traveling back and forth from work, all those hours, everything that goes into getting a paycheck or getting an income, whatever it may be, when you view it that way, it is a lot easier to understand the value of a dollar, the value of a pound, the value of a euro, etc. People forget that. And because things in this market happen so quickly, it's almost easier to convince yourself that the money's disposable and the money can be quickly returned. And the real issue here is that everyone is focused on solely making money, but not everyone is focused on protecting and saving their money. How do you make money if you've got no money to invest in the first place? How do you invest around the bottom of a bear market before the bull market begins if you've bought at the top of the previous bull market and have no money left to buy the dips? Think of it that way. The money you have should be cherished as a priority. Save your money, and one day your money will save you. If you blindly invest into the market in a reckless manner, without any consideration of the market going against you, you're not going to be around very long. And as a matter of fact, I often think about this. What is the root cause that drives people to do this? And it does once again come down to external programming from social media. Because trading, unlike something like the lottery or playing in the casino, you see more losses in the casino. In fact, if you go to a casino, think of it this way. This will probably wake you up a little bit. If you go to a casino, what do you see when you look around you? You see people normally drowning their sorrows in alcohol, looking absolutely depressed and losing money. You very rarely see big winners. Now, if I told you right now, let's say someone on social media comes up to you, or you see a YouTube video, and this video says top 4 altcoins to buy right now to make 10 times wealth. You're actually more likely to put your life savings into that. But why is that? Because if I was to tell you right now, go to the casino, remortgage your house, guaranteed you're going to 10 times your wealth, you would go, I'm not that fucking stupid. But yet, most are that fucking stupid when it comes to investing in the market. They are willing to segregate the reality that all of these things are risky. And they will often do these things blindly and invest in the same quantity and higher level of risk into the market instead, believing there is a stronger likelihood of a positive outcome. Now, if I was to tell you, put your life savings into the lottery this week, you would go, no way, the odds are tiny. Well, guess what? Most of the people you see publicizing these unrealistic wins and all kinds of meme coin flips and whatever are either, if telling the truth, a very, very small minority, or just lying. You do not realize how many people here in this game are lying to you on a consistent basis. And what allows you to believe you have a higher success rate by being absolutely stupid is because you see more wins publicized than losses in the trading game. This is also why I consider both sides, because I do not want to be blinded to the reality that you can lose, and you can lose everything for that matter. Yet, how many people do you see on social media when you scroll on your X account or your Instagram timeline? How many people do you see winning the lottery? How many people do you see winning big at the casino? Not many people. But when it comes to trading and investing, if you're involved in the sector, you are completely exposed to endless wins, but yet nobody shows their losses. And when you view it in that way, it helps you realize that often you are being lied to. And that kind of perception of just win, 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 or, you know, every time you go online, it's like, I flipped $100 to $1 million. I done this, I bought this meme coin. The truth is, the people doing the videos that say my top 4 altcoin picks, they're doing them every fucking week. And why is that? Because they have an insider allocation, or they've been paid to shill those coins. And in fact, they're probably in from the very bottom and releasing those videos once they've already done a 10x and need the exit liquidity. The truth is, most of those Soulflare screenshots are faked, photoshopped. Not a lot of what you see is actually true. but it can affect us emotionally and subconsciously to make very, very stupid decisions within the market. So this is essentially why playing both sides is crucial. It can seem stupid how this much goes into it, but I wanted to explain the logic and rationale behind the strategy because I think it's something that every single crypto investor and trader should adopt. If you do not understand the opposing side of your investments and the market you're trading within, knowing very well you are not in control of that market, well, you are setting yourself up for failure. You are destined to fail. Without being sensible, it is not about being right or wrong. The end goal in this game is to make money and protect your capital. And I guarantee you, if you start to prioritize and go into every single investment and trade, instead of going, what if it goes right? Ask yourself before pulling the trigger, what if this goes wrong? I guarantee you, if you have that one single question to yourself before executing a trade or investment within the market, you will not do what you're about to do. You will reassess. You will consider how bad things can go. You will consider how much money you can lose. And that is how you succeed in the crypto game.